Is Elijah K. Johnson with this surprise live stream for everyone here. I was just going to get on the call with Craig Hemke here from TF Metals Report, check the gold and silver prices, and well, we're seeing a quite of a pop today. What do you think is happening today, Craig?
Well, there's a couple of things that are pushing price along, and it's coming at a rather curious time. A lot of people are focusing on the FOMC meeting next week. Um, and I keep track of the commitment of traders report, and I'm a little worried about how heavy some of the positioning is getting there. But open interest is very low, so there's room for people to come in, and boy, they're coming in today, Elijah. And to answer your question, it's curious. First of all, I've been watching this stuff now for 15 years, every single day. And it's remarkable how the symmetry sometimes. Gold first broke out back during the COVID year, right? And then consolidated and traded sideways in a range for 3.5 years. And then it broke out on March 1st of this year, and then consolidated and traded sideways in a range for 3.5 months. And then it broke out above and out of that range at 25.20 was kind of the high, and traded sideways in a range for 3.5 weeks. Anyway, interesting how that works out sometimes. And so, yeah, what's driving it ultimately? Okay, let's get to your question. Two things today. I think you can lay it on there. One, the ECB, 1 week ahead of the Fed, announced that they were cutting rates today, 25 basis points, which again tells you for sure the Fed, I mean, this is a done deal. The Fed's cutting at least 25 next Wednesday when the FOMC concludes. But not only they announced that, they said they're doing that and they're expecting their economy to kind of slug along, not do real well, but they're not sure inflation is done. And it had stagflation written all over it, which is something that you and I have discussed, and I've discussed at my site for about 4 years. I think the first time I ever brought it up was about June of 2020, that was ultimately where all this was headed. So you got this really stagflationary report and rate cut out of the ECB. So that came at about the time the COMEX opened. Then the PPI report came out at 8:30 Eastern, 10 minutes after the COMEX, and it was pretty tame. So that's all of a sudden, okay, now we can start moving up. One more thing, Elijah, and this is the biggest thing of all. Later this afternoon, as we record this on the 12th, we'll get the monthly budget deficit numbers from the federal government. It was expected to be really, really bad. And when we get all of the details at 2 o'clock Eastern, it's going to be really nasty because Bloomberg reported then early this morning the headline number. Elijah, good thing you're sitting down, right? I can see you. It looks like you're sitting. For the month of August, then this is from the Bloomberg report. I don't know if it was leaked, if they just let the headline number out. For the month of August, the U.S. government ran a budget deficit of $380 billion for the month. 11, 12 billion a day. It's remarkable. A billion every 2 hours, 500 million an hour. Am I doing the math right? I mean, now it doesn't annualize it like that, right? You can't just go, well, it's going to be, 400 billion a month for 12 months and annualize it 5 trillion, because there are months like April, right, where you get, all these tax receipts, or every quarter, maybe June, September, and all that kind of stuff. But this kind of number is going to push the annual number when we get it early in October, when we get the look, because the U.S. fiscal year ends on September 30th. The annual number is going to be 2 trillion or very close to it, which is just outrageous. And then we now are well past $1 trillion a year just in debt service. And so you put those things together and it got us some momentum. We got above that 2560 level and broke out, and, it had to be a whole bunch of stop orders there. People that were short that said, well, on a breakout, I better cover that. And so you've had this steady move up since. Silver's moving higher too. It just tapped $30. So we're having a good day.
It definitely is a good day for the metals and for our viewers just joining us today. Yeah, we're seeing silver near $30, gold at 25.60. I think it hit. So I guess if we can give a overview, it sounds like what you're saying is that the sentiment or the expectation is that we're going to see stagflation going forward, which is the best environment for gold.
Yeah. Getting back to that, I think it was, I just have it in my head. It was June of 2020 when I first started talking about it on my site. That's eventually where this was headed. That, I mean, we didn't know about the $5 trillion that was going to get spent, and flushed out of the economy to keep it rolling to and through COVID. But beyond that, you knew that, any type of economic slowdown, which would then be eventual, was going to be met with even lower rates again and more QE and all that kind of stuff. So the inflation was never going to go away the next time we had a recession. Well, then there you go. That's what stagflation is. It's inflation in a stagnant economy. Very similar to what we had in the 1970s. And I'm sure everybody watching this call has seen the charts, of what gold has done or had done back in the 1970s. Broke out. It was held at $35 an ounce, and then Nixon closed the gold window and it went from 35 to 200 in a couple of years, then pulled back 50% to 100, and then went to 800 a couple of years later. And again, I'm not trying to tell you, we're going up eightfold from here, but this stagflationary idea where negative real interest rates take hold is a very positive scenario for owning gold. Negative real interest rates. And what's a real interest rate? You take your nominal rate of interest, say it's 2% that you're earning, but inflation is 4%. You're actually losing 2% a year in cost of, in trying to keep up with the cost of living and all the other expenses that you have. You're not even keeping up. That's a negative real or inflation adjusted rate. And again, that where this impacts gold as a foundational investment is what is, I mean, for 15 years, well, maybe not so much anymore. I always heard, well, gold doesn't pay a dividend. Right. That's fine. It also, it keeps you up with inflation, obviously. And when inflation is eating away at your savings that quickly, makes it look even better as a foundational investment versus treasuries and everything else. And that's what drives demand for it. And that's why it's so correlated over the years with negative real interest rates.
No, it seemed like with yesterday's CPI number that was lower. I mean, it was as expected and it was pretty low, I think 2.5% or something like that.
Mm-hmm.
So it seems like, can you expand maybe on why the markets are looking at this and saying stagflation? It seems like maybe inflation, at least if you look at the official numbers, is under control.
Official numbers. That's right. Part of me wonders if um, human beings aren't seeing through the level of BS. Um, Elijah, how many times have we done? I mean, we've been doing these calls for 10 years. How many times have we done them shortly after a jobs report? Have you heard me use the term BLS BS before?
Yeah, definitely. And I think shadowstats.com is a great website to
Right.
check out to get maybe a more realistic view of what is going on.
Um, the reason I call it the BLS BS is that monthly jobs number is cranked out by the Bureau of Labor Statistics, the BLS. And it's BS because it's just, how do they know how many jobs the US created when they issue the report on like the third of the following month, right? Here's how many jobs we created in March. Well, it's only April the 2nd. How can you possibly know that? Well, it's because all this statistical gobbledygook based on the last 20 Marches, and they try to guess, it's all. And recently, and I'm sure most people know, you get a headline number of a certain number, and then the next month and the following month, those numbers are then revised lower. Okay. So it's just BS. Well, Elijah, I tell you all this. Not many folks know the same organization that cranks out the jobs report cranks out the CPI, the BLS, the Bureau of Labor Statistics. So when you see little things buried in that CPI report, for example, within the CPI, the calculation of health insurance costs has fallen 31% over the last 2 years. And because it rose in the first, if you look at a 5-year picture, it's down 10%, only because it was rising in 2021 and 22. So the BLS is telling us that in health insurance costs have fallen 31% over the last 2 years, or 10% over the last 5. That is demonstrably false. Not just anecdotally, where you and I are like, I don't know, that's not true. My health insurance costs are up. It is demonstrably false. Anybody can prove that there's no, it's up 31%, if anything. But yet, as a factor of the CPI, we're told it's down. And so, circling around to your question, why would we be rallying if, inflation, is coming in and all that? Well, maybe, like I said, maybe there's some human beings that are finally starting to figure out that they're being fed a level of manure consistently by the government statistics.
No, I think that's really interesting to see, and it's just, I guess, maybe over the last couple months in the political arena as well, it's just amazing to see how much the mainstream can just change the narrative,
Mm-hmm.
prop up another candidate that
Mm-hmm.
seems completely not, I guess, in a lot of respects, not ready for the job and stuff like that. It's just like, and what people didn't like her before, right? And now people are more
Right.
favorable to her. So it's just amazing the kind of spin that the mainstream media is still um, capable of doing. But it sounds like your perspective is people are seeing through this now.
If you're paying attention, it's pretty easy to see through it. The problem is most folks are living their lives, right? And it's not an easy life to live. Go back to that jobs report from last Friday. The U.S. hasn't added any full-time jobs over the last 2 years. The only jobs that are being added are part-time jobs. Okay. Even this most recent month, full-time jobs down, part-time jobs up. The simplest explanation for that is all of the layoffs you've seen. Where the average guy, he's got a reasonably good, white collar job, if you want to call that, making 90 grand a year, and he's got benefits like PTO and health insurance and everything else, and he gets laid off. Well, that doesn't mean the dude doesn't still have to make his mortgage. He doesn't have to feed his family, have to save for retirement. So what would anybody do in that situation, Elijah? While being on LinkedIn or whatever else, trying to find a new job, man, you're going to go sort packages for Amazon. You're going to drive an Uber on the weekend. You might even deliver some pizzas at night. That's 3 jobs. So you lost a good job. You replaced it with 3 crappy part-time jobs because you got to feed your family. And the BLS says that's a net gain of 2 jobs. Okay, so people are out there. They sense, I don't know about that. They hear the news, they hear Lester Holt trying to tell them what's going on, and they go, I don't know. But if you look around, if you have the time to look around, and most folks don't because they're trying so hard to keep themselves afloat. If you look around, it's pretty easy to connect all these dots. And again, I get people all the time, oh, come on. Come on. The BLS isn't, they're not politically motivated. Really? Have you ever looked at the demographics of Washington, D.C. and Northern Virginia, where all the government employees work? They're like 95% Democrat. Do you think there's an incentive to kind of cook the books so that President Biden or Vice President Harris can go out and say, oh, look at this great economy, man, 212,000 new jobs. By the time it's revised lower 60 days later, it's been revised twice, and now it's 110,000 jobs. And actually, they never come back out and say, oh, I'm sorry, I misled everybody. Now you get the headlines, right? And the market loves the headlines too. So again, I probably sound like I should keep a metal hat I can just put on when I talk about this stuff, Elijah. But I don't think it's a stretch to think that there are incentives to either goosing the GDP numbers, goosing the jobs number, keeping the inflation level low, so that in one thing, at least the bond market remains orderly and interest rates don't go to 8-10%. You've got to have buyers of those bonds to keep that from happening. And what would that do to the interest on the national debt, Elijah? So there's all kinds of, cooks in the stew, kind of, I don't want to use the words conspiring, but loosely doing their job, working together to create this, I don't know, create this, what are those things you used to make in grade school? The collages, right? Where you had to like make little things in a cardboard box. That's kind of what they create with all these statistics to make you think that it's real or make it looks like it's real, but it's not.
Now, one of the reasons precious metals seem to be rising right now is largely in part because of central bank buying, right?
Yeah.
And we have a question here about that. The questioner asks, if sovereign countries go directly to mines, um, would that put a price, would that cause a price change for the LBMA and COMEX? So would the LBMA and COMEX kind of lose control of the price at that point?
Um, I don't know. There's so many ways to look at that. How do you go directly to a mine? Because mines don't produce metal. I mean, they send doré bars, and then those go off to a refiner, and then the refiner refines them down to the 4.9 standard of, in kilo bars or whatever. So I'm not sure pick your country that's actively buying gold, Poland, or Turkey or, India, whatever. I'm not sure they'd go to a mine. It also kind of reeks of why don't they just nationalize their mines, and just say, hey, our metal is ours. Um, so I'm not sure about that. I do think that the central bank gold demand is significant in a number of ways. Again, the gold pricing scheme as it is now between New York and London relies almost entirely on forward contracts and futures contracts and all these different derivatives where 1 ounce of gold is levered nobody knows how many times, how much physical gold actually underpins the system that has all these derivatives floating on top of it. Think of it like a pyramid. There's 1 ounce of gold down here, and there's all these forward contracts and futures contracts. So as you remove ounces of gold from that base, the leverage just gets stretched even higher. So the central bank buying does play, just like all of us buying too, does play a role in creating a tightness in that system that will one day force a deleveraging of it. And we'll get to find out what the tide will go out and we'll find out who's swimming naked. Who is it that's, they own nothing but, promises, promissory notes and warrants and contracts that don't have any gold at all. And they're going to look around and go, wait a second. I was told I had gold. And you don't unless you got the real thing. So anyway, central bank demand, very important element of why we keep moving higher.
No, I did want to also discuss. I mean, people have been talking about platinum, right, for a long time. There are a lot of viewers
Yeah.
discussing in the chat here about platinum. We are seeing platinum rise as well, and a lot of people have been talking about that funny ratio between gold and platinum, with gold now pretty much at the highest it's ever been compared to platinum, platinum being the lowest it's been ever compared to gold. Typically, platinum has been higher than gold, but in recent years, it's way below. So, your perspective on that, and do you think we could start seeing platinum possibly outperform, or what do you expect for the price going forward?
Well, I've never owned any. I don't own any platinum. I've never even traded options on platinum. Uh, on my site, we used to call it Platinum Sylvia for Sylvia Plath. Who eventually, anybody that took an English course or literature course who remember Sylvia Plath was this, she obviously had some mental illness, and then one day she just took herself out. And because trading platinum would make you suicidal. That was always kind of the off-color joke, because so many times it doesn't make any sense. So I officially don't have an opinion on platinum, but I will offer you this. It's in there with palladium and really silver to a great extent, thought of as a commodity and an industrial metal. The pricing scheme is the same of the leverage of ounces in London and New York. Okay, so all of that's the same, but traders look at it as an industrial metal. I've over the last couple of months, I've often used kind of the analogy of a seesaw when discussing gold and silver, where you've got one end of the seesaw, you've got gold, and the other end you got copper as the king of industrial metal. We might as well put platinum in there with copper. And if gold goes up, but copper goes down, the hinge doesn't move, right? And that's what silver's done. I mean, up until today or a couple of days ago, here gold is breaking out to new highs versus May, but silver was down 10%. What's going on? Well, copper's down 20. And so, as that's kind of an easy way to look at it. If you can raise the whole seesaw, get gold going up, and get all the industrial metals going up at the same time, well, then silver and platinum, everything else is going to go up with it. And we might be kind of seeing a little bit of that at present. But I think, well, anyway, you probably want to ask me about silver, but backing up, platinum is an industrial metal and subject to maybe a little different set of market forces than what gold and silver are. So again, I just don't follow it that closely.
Right. It is mainly more an industrial metal where silver plays kind of the industrial and the monetary, and then gold
Yeah.
mainly the monetary. So it's a different beast there, right?
Yeah.
I did want to, as you mentioned, ask you about silver and maybe gold kind of going into the end of the year. I mean, we've already seen such a run in both the metals since the beginning of the year, but do you anticipate gold and silver will be higher come Christmas?
Versus today.
Yeah.
Um, yes, but I'm not one of these like to the moon. I've seen stuff now that, oh yeah, it's going to double before the end. No, it's not. That's not how it works. Bull markets under this pricing scheme unfold all the time in 2 steps forward, 1 step back, where you get a big rush of speculator money that comes in, which I'm sure we're seeing today. And eventually that exhausts itself. And then the price chart tips over and you move back down below a moving average, and some of that speculator money rushes out. And then you're set to move forward again. And it's a series of higher highs and higher lows. It's not just straight up. And until there's a delivery default and all that kind of stuff, there's not going to be. So to answer your question, I think another high is coming. We've been saying this all summer. It's impossible. It's really hard if you look at the chart to try to speculate how far it might go when you're at all-time highs, right? It's silver, you can look at it and go, okay, well, there's a reason it stopped at 33 and pulled back. And there's a reason why the next level might be 35, 36, because you can look back 15 years ago or 12 years ago and see the resistance levels there and go, okay, well, if I can see that, everybody else can see it. That's probably the next target. But gold, all-time high territory. There are, though, some trading tools, Fibonacci retracements, that kind of stuff, a whole bunch of them on the weekly chart and the monthly chart all seem to point to about 2650, 2700 as the next target. I figured that was coming more like in October into November. We may be heading there next. I mean, it's still coming. I was personally thinking September might be kind of a challenging month because the last 5 Septembers, Elijah, have averaged down about 3% for gold. Seasonally, it's always been a pretty good month, but the last 5 years have been, So I thought, well, maybe we'd kind of, dance around a little bit here and head lower, at least to and through the Fed next week. But now here we are rallying instead. Anyway, either way, must be too much coffee this morning, Elijah. Either way, I think the next stopping point here is another $100 higher. And then, we get another pullback later on in the year as we wait to see, where we're going to go next.
Well, Craig, we really appreciate your time as always, especially for this surprise live stream here. And we do appreciate you being able to change plans real quick. We were just going to do a recorded interview, but we thought, why not a live stream with the markets moving as they are? So we really appreciate your time. tfmetalsreport.com is where they can find your work. Can you tell us a bit about that and any last thoughts you had?
Well, it's been a pretty active day today on the site. I can tell you that. I write a post every morning and record a podcast most every afternoon too. And then everybody reads it. It's a member of the site, and then they all interact. And everybody's talking this morning about not only price, but I mean, they're sharing ideas about what drove that price. Maybe some mining companies that they're looking at that are having a good day. It's a great forum. It's only $15 a month, so it's not like it's some kind of exclusive thing. But if you're in the sector, I just would strongly encourage you, if you don't have time to see through all the crap, because you're one of the people that's busily trying to, make ends meet and see your way through life. Let me do that for you. That's what I do for the $15 a month. I try to keep an eye on things and warn you about what's coming. And so that's what the site's about. It's built on this idea of the end of the Keynesian experiment, the end of this debt-based system where the debt and the interest on the debt are spiraling so quickly out of control that it almost implodes on itself, and then something else eventually emerges. We're obviously 380 billion a month, Elijah. We're getting close. So come join us. I think, folks, that even if you just check it out for a month, I think you'll see what the value is.
Fantastic, Craig. Thank you so much for your time. And for all our viewers watching, please hit the like and subscribe button and the bell icon if you want to let us know, or we'll let you know when we do any of these surprise live streams or the regular posting at 8 p.m. Eastern every day. Thank you so much, Craig, for your time, and God bless.
Always good to see you, Elijah.